New York City, Wall Street, the epicenter of American finance and economic power, and one of the most iconic cities in the history of the world. It's home to the headquarters of the biggest investment banks on earth, like JP Morgan and Chase, Morgan Stanley, and Goldman Sachs, the headquarters for the behemoth of the asset management world, BlackRock, and it's home to the biggest stock exchanges in the world, including the Nasdaq and, of course, the New York Stock Exchange, which commands 42.4% of global market capitalization, or worth $46.7 trillion as of 2023. But it wasn't always this powerful, and it hasn't always been the financial capital of the world. It simply holds that title today. Before it came London, and the first time New York City took top spot was technically after World War II, but this wasn't permanent. You'd be just as shocked as I am to find out that, surprisingly, the influential Global Financial Centers Index, which to be fair only started in 2007, first had NYC overtaking London as the financial capital of the world as late as 2018. But it depends on what metrics are used anyways. To other analysts, New York overtook London long before then. What's for sure though is that since World War II, either London or NYC have occupied the #1 spot in global finance. And as they've continued to trade places, the Big Apple has increasingly separated itself over the years as the clear #1. Regardless, New York City is certainly in the lead for the foreseeable future. So the question is, how did New York City overtake the city that was once known as the capital of the world, aka London? Well, to understand that, we have to look at how London did the same thing to its predecessor, Amsterdam. In the 17th century, there was no question which city was the global financial capital. Amsterdam was on top of the world, and this period was the peak of the Dutch colonial empire, often referred to as the Dutch Golden Age. In fact, it was Dutch settlers working for the famous Dutch East India Company who established New Amsterdam on Manhattan's southern tip. Ever since, business has been the area's most important activity. Only when the British took over did the city's name change to New York. The links between these three cities, the last three global financial capitals, run even deeper than it appears. So let's see how these transitions happened, starting with how London took the crown that it went on to hold for centuries. Amsterdam was the first financial hub in the world. The first stock exchange in human history was built there in 1602, including the world's oldest stock, the Dutch East India Company. A lot of the complex financial instruments that permeate the financial world today, derivatives such as options, puts, calls, forward contracts, and futures, were all created in the commodity/stock exchange just off Dam Square. London ended up borrowing and improving on a lot of the groundwork laid by the Dutch capital, eventually developing a market-centered system, as opposed to the bank-centered system of Amsterdam. As the Netherlands began a political and economic decline in the 18th century, London became dominant. After 1750 especially, banking suddenly began to flourish in London. It also then rivaled Paris as the world's financial capital for the first half of the 19th century. It was only in 1848 when the Bank of France ran into trouble during a revolution which saw the creation of the French Second Republic. They could no longer exchange paper money for gold, causing them to run short on gold, which allowed London to emerge as the definitive financial hub. From here until World War I, London didn't falter at all. It honed in on maximizing its financial sector, sometimes to the detriment of the UK's domestic manufacturing needs. This was because the City of London, which is London's central business district, home to the Bank of England and the London Stock Exchange, was the driving force behind monetary policy for the entire British Empire. It was at the heart of the British economy and focused on financing trade and manufacturing throughout their empire, as opposed to only the mainland's economic needs. Still, the formation of Lloyd's of London, the Bank of England, and the London Stock Exchange laid the groundwork for the economic boom of the Industrial Revolution from around 1760 to 1840. It's after this that a lot of Midlands banks and local banks across England merged with larger entities in London and Birmingham, because there was danger for local banks that became too heavily involved in single industries, like Bradford in wool, Oldham in cotton, and Sheffield in steel, and merging helped them diversify their loan portfolio and mitigate those risks. So mergers began to happen more and more, and from about 1885 until the end of World War I, so many high-profile mergers happened that England and Welsh banks were suddenly consolidated, and by the end of the merger wave, the market consisted of only 5 major banks. The onset of joint stock banks, which allowed them to function like corporations with shareholders and stock prices, along with the development of limited liability for banks and other shareholders, all contributed to the consolidation of smaller entities into a few banking giants. The size of these banks and their location in the capital city of the world's strongest economy meant that they were the beating heart of international finance. In this new landscape, the opportunity for commercial banking services really expanded, because the large banks had way more capital to pool together. The pound became the benchmark currency for international transactions in the latter part of the 19th century too. This was for a few reasons. Not only was it pegged to gold, but with London being the world's capital for insurance and commodity markets, British banks expanding overseas, and British capital being the main source of foreign investment around the globe, it was inevitable. London's population exploded as well during this period, jumping from 1 million in 1801 to 6 million in 1901. This demographic expansion coincided with the city's port becoming the most active in the world, triggering an explosion of further economic growth and leaving London as the best choice for the banks of other industrialized nations to set up shop, invest, and get short or long-term credit. And that's really at the heart of this financial hub thing. Like, how much does your city attract foreign investment? Or more precisely, how do your banking regulations facilitate foreign investment? Are you the best spot for innovation, financial services, etc.? Don't forget either that London's geographic position in the GMT time zone means that they're able to allow their bankers and traders to perfectly service both Asian and North American clients during business hours, as well as European ones. This is huge, being able to act as the bridge between the two. Speaking of switching between time zones, if you wanted to switch between internet servers, well, let me introduce to you the sponsor of today's video, Surfshark VPN. With over 3,200 different servers in over 100 locations, you're able to virtually change your IP address and place yourself wherever in the world you'd want to be. And don't worry, this is completely safe. In fact, Surfshark uses top-grade encryption and complies with the strictest security measures. When you're using one of their features known as camouflage mode, not even your internet service provider will know you're using a VPN. But besides that, they don't collect your personal information, online activity, and even protect your data while using public Wi-Fi. With just one account, you can use it on an unlimited amount of devices. Yes, unlimited. So right now, if you use our discount code VERST, like the link below, or even just this QR code here, Surfshark is offering 4 months free. Don't worry if you're not too sure of it either, because they offer a 30-day money-back guarantee so that there's absolutely no risk. In fact, there's more risk in not using a VPN while traveling than trying this out. Alright, anyways. This is all how London stayed on top for so long. But that was until the Bretton Woods Agreement in 1944, which brought about the creation of the International Monetary Fund, the World Bank, and most importantly, made the US dollar the world's reserve currency, with all other currencies pegged to the value of the dollar. This really just solidified not only New York City, but the United States overall as the dominant superpower of the time, with the world's largest economy by far. But even then, it's actually debatable if we can pinpoint this as the start of New York City basically becoming the definitive financial capital of the world. Some analysts say it came even earlier back when they funded France and the UK during World War I. Even after it definitely became de facto number 1 after World War II, London still had times where they surged back to the top spot. The first notable, albeit quick time, was when the euro-dollar market developed in the 1950s, and London took a lion's share of it, and the other was in the 1980s. See, not only did English common law mean that the Bank of England could allow lightly regulated offshore markets to flourish, which attracted hundreds of foreign banks to set up branches in London, but in the 1980s, London's financial markets were deregulated, causing what was known as the Big Bang. This deregulation came on the back of a 1979 decision to allow the purchase and use of foreign currencies without any restriction, something that had not been the case due to World War II policies. These sweeping changes, including the switch to electronic trading and an avalanche of foreign companies moving to London, reinstated the city as the world's financial capital deep into the 20th century. The average daily turnover of the London Stock Exchange had risen from £500 million in 1986 to more than $2 billion in 1995. But this did eventually come to an end, and NYC climbed its way back to the number 1 spot with tactics that aren't all that different from London's. But the process of becoming the number 1 financial capital has actually been a long time in the making. And again, not unlike London, New York City's rise to the top of the banking and finance industry coincided with the rise of its commercial trade sector. If we look back at the history of New York itself, and why the Dutch chose to even go there in the first place, there were some obvious signs of its potential. Dutch merchants saw it as a perfect location due to its ports, or the now Manhattan port. It was at the mouth of the Hudson River, The natural shape of the harbor was optimal, and the relatively shallow waters of the harbor make it difficult for large waves to form. It was also more convenient than Philadelphia or Boston's ports, and the Hudson wasn't prone to freezing like the Delaware River. When construction of the Erie Canal was completed in 1825, the Hudson River and the Great Lakes were connected, and that helped the city become America's most important trading hub. By the mid-1800s, the canal handled more goods and people than all the other American ports combined, helping New York City replace Philadelphia as the financial capital of the country along the way. Their geographical location on the northeastern coast of the US is a big reason for this success. Just like London's population boom, 19th century NYC proved to be the immigration hub of the US, with its population rising to double the size of Philadelphia's by 1860, with over 800,000 people. The new immigrants fit right into the growing manufacturing and commercial industry. So a lot of factors have to come together: geographical location, a population increase both for labor supply and productivity, and of course, financial innovation. The city's role as a financial hub really exploded in the late 19th century, when it became a center for trading stocks and bonds. From 1890 to 1930, NYC had a similar experience to Paris during the Belle Epoque, when it distinguished itself as the cultural capital of Europe and experienced a golden age of influence, especially in the arts. Not only was New York City the center of American finance and trade, but it asserted its dominance as the center for media, entertainment, pop culture, and high culture. All of this attracted investment in various industries. By 1920, more than 25% of the 300 largest corporations were headquartered here. And despite the Great Depression and the 1929 Wall Street crash coming at the end of this period, which was obviously a catastrophic era for finance, it was in this era that the US transitioned from a debtor nation to a creditor nation, from a nation that was being invested into to a nation that was doing the investing. Basically, they had a positive balance of payments for once instead of being in debt, which helped trigger rapid economic growth. This transition was mainly due to the loans floated on behalf of the French and British governments during and after World War I. The lending was necessary for European countries whose economies were devastated by the war. A similar scenario happened again after World War II, with the Marshall Plan, of course. By the time the war came to pass, London and the British Empire were in decline, and the US position being so far away from the battlefield really made it a safe hotspot for investment. This put the US in a position where they became the clear hegemon in the West, economically and militarily, and this allowed them to begin reshaping the world in their image, which involved promoting democratization and economic interdependence, particularly in Europe, but internationally too. The theory generally went like this: if the world was made up of liberal democracies, not only would there be less reason for war, since democracies in theory shouldn't go to war because they value human rights, but this would also allow states to focus on prosperity instead of security, which means less trade barriers, more economic interdependence, and integrated economies that all make war too risky to pursue. In this pursuit, the US ended up molding the global economy in a way that maximized their power, with, like I said before, the Bretton Woods Agreement. The new set of rules and regulations for an international monetary system put America and its financial capital, NYC, at an unmatched level. At the time, US enemies like the Soviet Union were skeptical of this new system that emanated from Wall Street. The role of the institutions introduced at Bretton Woods continued to receive this criticism from countries of the Global South. The view that the IMF and World Bank are simply an extension of US imperialism may be a bit cynical because they have done plenty of good in the world of international development. However, the debt that developing nations have to those institutions after taking out loans is a de facto debt to the US, which puts a lot of pressure on them to obey or go along with US policies, domestically and in terms of their foreign policy. That's actually a big reason why BRICS is expanding so rapidly today, because it offers an alternative to these organizations which are tied to US power and influence. So yeah, Bretton Woods was really the beginning of US hegemony as we know it today. The new dollar status put New York at the center of international finance, and from here things really took off. Wall Street and its financial services industry became the strongest in the world. NYC-based banks are still the largest and richest in the world today, offering the most for businesses seeking financing, and the cycle keeps feeding into itself. The more innovative and successful companies that come, the more the financial services industry grows, and so on. Over time, this process has allowed NYC to separate itself. As of 2024, New York City has been home to 41 Fortune 500 companies, including the biggest banks on Earth. That is first place by a long way. Houston is a distant second in the US with only 21. most of which are concentrated in different industries like energy, petroleum, and gas. For comparison, in 2023, London fell out of the top 5 cities in the world with Fortune 500 corporations' headquarters. It has only 9 of them headquartered there, down from 13 in 2022. Innovation in a variety of industries helped propel NYC's financial dominance. In the second half of the 20th century, New York City not only had the biggest stock markets and banks, but it was a hub of innovation in telecommunications, technology, investment banking, and much more. It continues to be a leader in attracting business, helping it maintain top spot amongst global competitors. For example, fintech is a core industry for luring entrepreneurs to New York City because it offers resources and expertise other cities can't. The city is home to several incubators that specialize in fintech, and they provide funding and mentorship to startups in the early to mid-growth stages. On top of this, NYC is also a global leader in financial regulation, since it's home to the US Securities and Exchange Commission, which regulates securities markets in the US. Besides expanding lucrative industries like technology and banking, NYC is also a leading city for global talent flows. Just like London attracted immigrants from all over the world in the 19th century, NYC has done the same in the modern era, only now, instead of traders and merchants, it's STEM graduates that are the desired arrivals. And when I say STEM, I more so mean in the fintech type of way, which attracts lots of quantitative analysts, or as they're commonly referred to in finance, quants. These highly skilled mathematicians are the engine behind risk analysis and strategic decision-making in the world of finance. And it's not like there's an infinite supply of competent quantitative analysts out there. They're massively sought after in the finance industry. NYC benefits from being a hotspot for such skilled workers due to the image of the iconic city, along with the obviously high salaries. Also, because a lot of the STEM talent in the US is foreign-born, the city is the beneficiary of the brain drain process in not only developing countries, but also wealthy ones where people are looking to make more money or take risks. When talented and educated individuals leave their homeland, it restricts their nation from developing STEM-related industries, and therefore from developing their economy. The country suffers as a result from this loss of talent. Just like other leading financial or tech centers, NYC is the one that reaps the rewards of this emigration. Being a leading city for global talent flows, especially in the finance sector, is another reason for New York City's sustained dominance. With the flow of global talent, investment, and innovation channeling its way into New York City like a river of gold, the city, its businesses, and their offshoots keep getting richer. In a world of free market capitalism, the resources eventually begin to pool at the top in the hands of a select few. And in the current system of international finance, unless something unforeseen were to massively upset the current trajectory, New York City sits at the top of that system, accruing more wealth, influence, and power every year and solidifying its position as the financial capital of the world. Who knows what will come next? Thank you for watching, and again thank you to Surfshark for sponsoring this video. Don't forget to try it for 4 months free using my link in the description below. See you in the next one.